So let's start with a Swiss-based company, Novartis, which is in fact one of the world's largest healthcare companies. It's similar in scale to the likes of Johnson & Johnson, Pfizer, and the likes in the United States of America, but we thought, well, look, for a change, let's talk about this one. So the range of activities they're involved in, we're talking medicines, pharmaceuticals, drug-based research products. It came out of the combination of Ciba Geigy and Sandoz back in the day. There is another major division which is eye care. They own a business called Alcon as well. And we'll go into a little bit of detail in a minute, what kind of things. And then they have a unit called Sandoz, which is involved with generics. So it's almost as though they kind of cannibalize themselves by producing generic versions of their own drugs. Because remember, 20 years is the rough time period that most countries allow drugs to be patented for, after which, in effect, you are subject to generic competition. Market capitalization, $198.38 billion. So you can do the conversion on that one, basically by working backwards from the European listed price. Price earnings ratio of 10.31, dividend yield of 3.75. Okay, so Joseph, what stands out for you when considering Novartis as a possible international investment opportunity?
No, certainly in terms of obviously the breadth of the products they offer in terms of medicines and so on. Yep. One of the key issues you mentioned is obviously the generics, and you've seen that the world has been saying, you know, we need cheaper medicines for everybody to have at least access. So that is very good for them. But also look at their dividend yield, 3.75. Yep. And if you consider where the rates are in Europe, and if they're consistent, if they've got a good progressive dividend policy, you would consider it to be, you know, quite nice sweetener. Obviously, if the you know, the price would go up in terms of capital appreciation.
Well, let's look at the share price, because this one has had a tough couple of months. You know, when we last spoke about Novartis on Hot Stocks, it had a market capitalization of $250 billion. Now it's down to 198. So to be perfectly honest, I'm not quite sure what's driving that. We know that in 2015, quite a lot of the global pharma companies had a bit of a downturn, but this one has continued to trend softer, which is a bit of a worry. I mean, can we think of any reason why that should be?
No, certainly. I think if you look in terms of all of the pharmaceutical companies, they're kind of battling. I think I know we're coming back to Aspen.
Got triggered by a comment or two from Hillary Clinton about the fact that she thought that pharmaceutical companies' margins were too fat and the prices were too high, and it set off a bit of a global you know, kind of shockwave in the industry.
I think that outcry is everywhere. You see here, obviously, there's also questions about Netcare getting into Lesotho, what type of agreement they are, because people are just saying hospitalization and the medical services are just quite expensive. Yeah. But really, if you look in terms of obviously the last 12 months or so, the share hasn't done very well. You know, it has been coming down, and there isn't, from a momentum perspective, it does look like it's going to continue to strip down.
I mean, 3 of their star products, let me just mention them because people will be familiar with them. Sometimes you can't make the connection between the products. So on the first hand, we've got Ritalin, which is a drug for ADHD, that's attention deficit disorder, very widely prescribed to school children these days to keep them quiet. Then you've got Gleevec, which is a major seller. It's an oral treatment for cancer, particular kinds of cancer, but it's an expensive drug that is widely used by people because it's extremely effective at dealing with a specific cancer treatment where it wasn't before. And then at the more prosaic end of the spectrum, you've got the product diclofenac, which is the key ingredient in Voltaren. So just about anyone, I mean, you're a runner, I'm a runner. Yep. You were telling me earlier you got a knee problem now. So this is what we take because, you know, and this thing is across the board taken over TC. So core, strong, very strong products. Yeah.
Certainly, I think they've got a very wide range of products. We believe, as I said to you, you know, one home at least, or every home is going to have one.
And the Alcon business, I mean, that's like, I'm wearing glasses, but of course people wear contact lenses. These you know, daily, they kind of go through 20 or 30 rands worth of contact lenses on an ongoing basis. Okay, so as far as this one is concerned, very strong. It's come down. We're not quite certain why that might be, just a little bit of a generalized sector issue, maybe a bit of results-based disappointment. So it sounds to me like it could be a potential hot stock because, you know, big global leader having a bad patch, likely to rebound.
Certainly it's going to likely to rebound. Look at the P about 10. So certainly I think there's that opportunity if you want to end us out. Keep it as a hot.
Maybe a closer look, but let's go with hot on this one. Okay, good.